Welcome back to the channel, my friend. I teach everyday investors like you how to generate consistent income selling options. You're going to want to watch to the end of the entire video because this kind of information I'm going to share with you is going to give you the edge that you need to make good decisions, have more conviction, and ultimately make more money. Now here's some housekeeping before we get started. I am not a financial advisor. The content of this video is for informational and educational purposes only. It should not be considered financial or investment advice. Before making any investment decisions, please do your own research or consult a qualified financial professional who can assess your individual needs or circumstances. Alright, let's get into the video. So what happened with SoFi's earnings? SoFi's latest earnings report came in hot. First off, the company posted record adjusted revenue of around $858 million, up 44% from last year, and a GAAP profit of $97 million. That's 7 quarters of profitability in a row. They added 850,000 new members this quarter, pushing membership to 11.7 million, and product growth of 34% to 17.1 million accounts. Not only are more people joining, but 35% of new products came from existing members, meaning cross-selling is working. Fee-based revenue jumped 72% thanks to their loan platform business. Even credit quality improved, with delinquencies and charge-offs declining. Now, why does this quarter matter? This isn't just another fintech's earnings beat. It's a sign that SoFi is turning from a student loan refinancer into a diversified financial platform. Their bank charter lets them hold deposits, which reached nearly $30 billion, and fund loans cheaper than their competitors. Net interest income rose 33%, while fee-based revenue reduces reliance on interest margins. Management also raised a full-year guidance. They expect $3.375 billion in revenue and $960 million in adjusted EBITDA, implying about 30% growth. They also plan to add at least 3 million new members. For a company that some dismissed as a meme stock a bit ago, it's pretty impressive traction. This quarter also introduced some eye-catching innovations. SoFi plans to re-enter crypto trading and launch blockchain-enabled remittances, which are basically cross-border money transfers. This will be way cheaper way of transferring, let's say, US dollars to maybe the Mexican peso. So instead of using Western Union or Remitly, you can do it through SoFi and probably a way cheaper rate due to the efficiencies of the blockchain technology. They're also working on an AI cash coach to help customers manage money. These moves could open new fee-based revenue streams. So how does this news translate for those of us selling options? The earnings this quarter was a blowout quarter, and now we're actually seeing the stock pull back a lot, mostly because of the dilution, so that could present a big opportunity. But there are two sides to every trade. SoFi's valuation is a bit high, but they are growing like crazy, so I can see it eating into that price to earnings. Now, because they are in the banking space, if macro conditions turn or growth slows, which I don't think will actually happen anytime soon, the stock could pull back hard, which in my opinion will be an opportunity. As option sellers, we can leverage elevated premiums while defining risk. Selling out-of-the-money calls on shares that you own or cash-secured puts at levels that you're comfortable owning the stock can be a way to capture income while giving yourself a margin of safety. Now remember, always size your positions responsibly, and remember, this isn't financial advice, just my opinion. Despite the strong quarter, there are real potential risks. Now let's talk about dilution. SoFi announced an underwritten public offering of about 71.9 million common shares at about $20.85 per share, raising around $1.5 billion. The underwriter, Goldman Sachs, has a 30-day option to buy up to an additional 15% more shares. SoFi said it will use the net proceeds for general corporate purposes, including working capital and other business opportunities. I personally think a possible acquisition could be on the table. People are panicked about the dilution, but Anthony Noto is a great CEO. And I believe that SoFi will use that money well and outperform the 7%-ish dilution that they cause for shareholders. Some other potential things to think about. The company still relies heavily on personal loans, which are sensitive to unemployment and interest rates. No one knows exactly what is going to happen, but it seems like we're going to get lowering of interest rates sometime between now through 2026. So that would be a tailwind if that happens for SoFi. Most importantly, the stock's big rise means expectations are sky high. If SoFi misses a quarter or guidance softens, the pullback could be big. I personally don't think they will miss a quarter anytime soon. They seem to always beat their guidance and raise expectations, quarter in, quarter out. Let's check out the options chain and see what opportunities there are for SoFi. Let's see here. So, 2178. Let's go down, sell put for August. Let's try the 15th because that is traditional expiration. Now, whenever you're seeing this video, try to go for that third Friday of the month if you can. But of course, you can do a different date if you want. But I generally go on the third Friday of the month because you'll see a lot more volume and liquidity and action going on that day. But you could really sell it on any date, depending on your style of trading. So SoFi, I really am bullish on SoFi personally. Now this is kind of where it becomes a little bit of an art as opposed to just math. But let's see here. So a $20 strike is going to offer me about a 1.5% return on SoFi by August 15th. Now that's actually pretty good. That's basically 16 days out. That's like 2 weeks. So that's a 3% return if it were to go out monthly. What I'm going to do, and that's actually a 0.21 delta, so that's pretty safe. I think what I'm going to do personally is I'm checking, the 21 is a 0.34 delta. That would be a 3%, pretty aggressive. What I'm going to do is I'm going to do the 0.27 delta. I try to keep it around 0.3 delta. I'm going to do $20.05. So that's going to pay me $44. Let's see here. And I'm going to do 2 contracts. Let's see here. 2 contracts. So 45, I'm going to get paid $90 up front. So just a recap. The current stock price is $21.77. Now their earnings were so good that this pullback, because of the dilution, I think is a bit of a mistake. I think Anthony Noto possibly has something really big planned to do with that money. Maybe not, but I definitely trust his leadership as a CEO. Phenomenal CEO. So yeah, I mean, the stock after the earnings was like $24. Pulling back hard for this, I think, is definitely an opportunity. So yeah, so I'm going to sell that $20.50 put. It's going to pay me $90. So basically, by expiration, by August 15th, if the stock is under $20.50, I'm going to be forced to buy those shares at $20.50, which is a discount to the current price. Now their earnings were phenomenal, and I think it's a great opportunity. As the great Peter Lynch once said, it is never too late to buy a great company. So so we'll see what happens. And then also, if it expires above that price, then I'm just going to keep that premium, which is pretty good for basically 2 weeks. So 44, let's see, I'm going to try to do $45. It may or may not fill. I'm going to put $4,100 of collateral, and that did not fill, so we're just going to go back. And, now it's at 42. Okay, let's try 43. Okay. Whoops. There we go. So we filled at, I got 80, basically $88. Okay, so that filled for 44. Nice. Okay, so I got paid $88 sitting on my butt. If you want to go deeper on strategies like this and trade alongside a supportive group of like-minded investors, consider joining our Options Hero community. It's where I share weekly trade ideas, in-depth tutorials, and live Q&A sessions with members. You'll find the link in the pinned comment below. I'd love to see you there.